What's up, guys? Good morning and happy Monday. This is T kicking things off for the October 3rd, 14 days before my birthday, in case you're keeping track at home. But good to see you guys. Hope you all had a good weekend. Let's do a quick sound check. All right, Lee, Lorna, Mirza, Mandy. Good morning. Andrew, Jane, CJ. And good morning to everyone on YouTube. So we'll jump in here, my friends. A little bit of a pop here for the market. And we're pretty much at the point where it's either a bounce or a die. So for those of you that watched my Sunday video, that was the title, Bounce or Die. So here's what we'll do, guys. We will take a look at the scorecard. And this is something that we do every Sunday morning in my mastery group. Scorecard for the week, points for the Bears, points for the Bulls. Spoiler alert, there's really no points here for the Bulls. Let's be fair, I guess. A grain of salt point. Market is oversold. That's about it. So as far as the scorecard here, points for the Bears, you've got the monthly squeeze in the S&Ps. You've got the weekly squeeze. We've got pretty close to a full stack of sell signals on the big three indicator. Most importantly, you have leadership breaking down. Think of your Amazons. Most importantly, think of your Apples. And then I think you got Tesla gapping down like $10 this morning. So now Tesla starts to crack. So leadership is breaking down. The dollar is still bullish. HYG is basically busted, and the VIX is still above 30. So if you guys want, take a screenshot of that. Because we are oversold, expect some bounces at some point. And being that we're very oversold, that short squeeze bounce can be a bit of a ripper. From a bigger picture perspective, if the market can't fix all of these problems, meaning the structure of HYG improves, the dollar is no longer bullish, Apple improves, Tesla improves, we cancel out the problems of these big squeezes, then maybe you get that bigger picture reversal. I think as long as these things are present, path of least resistance to the downside. So in other words, I don't trust any of these bounces. So this morning, for example, we got a pretty cute pop. So we're up about 1%. But if all these other things don't fall into place, it's probably a bounce you want to short into at some point. So we'll go through that list here, guys. Give you a couple potential trade ideas. And then if you got anything you want to take a look at, let me know here in the chats. But as far as the S&Ps, clean this up a little bit. And remember, for me, my outlook on the market never has anything to do with like the economics of it or interest rates or anything of that nature. For me, it's all about good old-fashioned price action and structure. So problem number one. And I use the term problem meaning these are things that could send the market much lower. So problem number one, guys, is that monthly squeeze. And I think all we want to do here is look at this like we would look at a squeeze on any other time frame. 15-minute, 30-minute daily squeeze. For those of us that trade the squeeze, the probabilities suggest under the 21 EMA, what's this, 4 months in a row? Yeah, 3 or 4 months in a row. Under that 21 EMA with a negative histogram, unless that all changes, meaning you're back above the 21, the odds would suggest that squeeze eventually fires short. In the bigger picture implication, so to say, the monthly chart's obviously a massive time frame. So I think a great example of the punch that a monthly squeeze can pack, a lot of that COVID rally was actually just a giant monthly squeeze firing to the upside. So after we got that first green dot, that's like 9 or 10 months of steady momentum. And those same rules apply to the downside. So if the bulls can't get the market, here's the problem. To improve the structure of this monthly squeeze, you need to see the SPX back up here at like 4,300. It sounds like a bit of a tall task. So yeah, for now, that's a bigger picture squeeze that, in terms of structure and momentum, looks like it must have fired short. In food for thought, it's your first negative histogram on the monthly time frame since 2008, which I think is super interesting. Like even COVID, for example, And of course, since 2008, there's been some pretty good pullbacks along the way. Even COVID didn't shift that histogram negative. So that's a bigger picture chart. But then if you take it down a notch to something like a weekly chart, there's also problems here. From the perspective of this still hasn't fired short. So last time your S&Ps fire a weekly squeeze short, we're going from like 4,200 to 3,600. Good $500 or $600 pullback. So if the bulls can't fix this problem, how do you fix this problem? You get the S&Ps back above the weekly 21 and you keep them there. Otherwise, this fire is short. That could be a good 6, 7 to 10 weeks of momentum to the downside. So a lot of work here for the bulls. So again, that has nothing to do with interest rates or the Federal Reserve or the economics. I think for a lot of us, that's a language we speak. The beautiful language of the squeeze. So to fix the problems here, we're talking like 4,300. You got to take out your previous highs. So in my opinion, a little bit unlikely. But then if we jump over here to the dollar, you guys know the correlation here. Strength in the dollar typically means more weakness in the equities market. So as far as the dollar goes, we did get just a little bit of downside last week. The little bit of downside didn't really do anything to crack the trend. So heading into this week, the dollar is still super bullish. You're trending above your daily 21 with buy signals. So bigger picture here, really thinking bigger picture. I think the dollar under the 50, then maybe we're out of the woods here. Otherwise, I think we respect the strength of this trend. So that's still a problem. And then, of course, HYG down here at the lows with a bunch of sell signals. So basically, at this point, that's like my recipe for a reversal. If we can see HYG back above previous support, so 73, 74 bucks, you really get the dollar breaking down to the point we don't have any buy signals. And then last piece of the puzzle here, if we can get VIX back under 30, then I do think with the market being so oversold, we could get some sort of short squeeze. But I really think you guys want to anchor to all those different things because the fact that we're oversold, and of course oversold, that's a subjective thing. My rule of thumb, once we're a good 2 to 3 average true range moves under that 21 EMA, we're quote unquote oversold. So based on that rule of thumb, the SPX was oversold at 3,800. We're down here another 300 bucks. So really be cautious here. There's that temptation, I think, like, okay, we're oversold. Here goes the market up 1% into the open. There's that temptation to want to jump in and say, here comes the short squeeze. Anchor to those different things there today. Does the VIX actually go under 30? Because think of the pop that the market had, I think it was last Tuesday. It was a good day for the market. The S&Ps were up 2, the Qs were up 2. Did the VIX ever close under 30? No. And sure enough, the market gapped down the next day. Did the dollar ever close? Why don't we anchor to the 21 EMA? Did the dollar ever close under the 21? No. And did HYG ever get back above 73? No, it did not. So in my opinion, unless those things come together, the market can bounce 1, 2, 3% here today. I'm not going to trust that bounce too much. If anything, I'm probably going to look to add a few more shorts into it. So those are the problems for now. As far as the indexes and as far as, I think, a few bigger picture things. To add to the list of problems, remember the significance here. Like all the COVID stocks are dead. So Peloton, you've got Teladoc going from like $300 to $25. So they've taken out all those names. What we've seen over the last, let's call it month to 2 months, they start taking out the big boys. Right? Down goes NVIDIA. Really, down goes the entire semiconductor sector. Down goes Microsoft. Like Now they're hitting the FANG stuff. There's Microsoft at a new low. There's my old friend Google. Fresh new low. Now they're starting to take out, I think, the most important two names here. As of last week, Apple. And remember, guys, we talked about this. This is kind of the theme throughout the market. We have a lot of things taking out key support with nothing to save them until they're back down there at the June lows. Like, that's where you get this free fall. They defend 150, they defend 150, they lose 150. You get like a $12 pullback in 3 days. And considering Apple is a good 15-20% of XLK, right? It's a big chunk of QQQ. It's a big chunk of S&Ps. The entire market's going to continue to trade lower if Apple just goes back to the recent lows from here. Right? We're not even talking about Apple making a new low, breaking 130 and trading much lower, like just down to previous support. That's going to put pressure on the overall market. If Apple gets there, of course, you see what's up from there. But you start taking out leadership, guys. There's not too much left. And now, as of this morning, Tesla's going to gap down a good $10, which is good for us because we got short Tesla on Friday. Tesla takes out 265. It's basically like Apple taking out 150. Apple wasn't able to quickly, quickly is a key word. Apple wasn't able to quickly get back above 150. That makes it susceptible to that free fall, because there's no technical support there. Tesla cracking 265, it's a bit of the same. It can't get it back above 265. Doors wide open there for a move down to the June lows. So, not to sound super bearish, guys, and for what it's worth, Saturday, Sunday, I'm looking for reasons here to give the bulls more points. If I'm going into the week with 2 short positions, which I am, I'm not so much looking for things to support my holdings. I'm looking for the opposite. Like, okay, here's all the reasons I think path of least resistance is to the downside. Is there anything I'm missing? I couldn't find anything this weekend other than the fact, yeah, we're oversold. And we've been oversold. So, as always, make sure you don't marry your ideas. But I'm seeing a lot of problems right now, guys. So, there are only problems if you're getting long in all this mess. Until these things change, these quote-unquote problems, I think they're going to serve you well if you continue to try to short the bounces. So on our books, we've got a call credit spread in Tesla. And of course, if we did out the money puts, we'd probably make a little bit more here. But the call credit spread gives you some flexibility. So we opened the trade on Friday. We got the short calls up there at 3 hundo. And that trade expires all the way in November. So plenty of time on that one. And then we've got a put debit spread on Snowflake, which up to this point is playing tough to get. Kind of the same thing, though. You take out 165, not to the same extremes as a Google, an Apple, or a Tesla, but you probably get a quick flush down to 150. So that is the outlook, guys. Again, bounce or die. There's just too many problems. Forget the dollar, forget HYG, even forget Apples, the Teslas. Just in that one chart, the SPX, there's so many problems here in the structure from the top down. That's the most recent shift in our market. So make sure you're mindful of this. Even though we've had a pretty good pullback this year, right, 4,800 to 3,600, it's nothing to sneeze at. The major thing we have to keep in mind, you could argue we're still in a monthly uptrend. Yeah, it's been a good pullback. We haven't really put a we haven't really put a major dent in this trend just yet. Under the monthly 50, and then that weekly squeeze fire is short, it's a whole new ballpark, right? The entire COVID pullback never shifted your monthly trend from bullish to bearish. Right? Whatever was going on back in 2018 never shifted your monthly trend. right? So all these different things, COVID, 2018, whatever was going on back there, all of that was taking place in the context of a monthly uptrend that really started back here after we bottomed post financial crisis. That flush didn't kill the trend, right? That didn't kill the trend. That didn't kill the trend. COVID didn't kill the trend. But now you have your first shift of momentum on the histogram since 2008. Since all the way back there. That's really important context. Every daily downtrend, every weekly downtrend up to this point has been in the context of a monthly uptrend. So that's where things can just continue to get uglier to the downside. The daily chart's busted, the weekly chart's busted, but now you're taking out the trend and potentially doing it in like the most dangerous way possible. Like a monthly squeeze is a force of nature. If you want to keep adding to the list, also ironic, the market's pulled back all year long. Guys, Apple's been sideways. Apple's still in a really strong monthly uptrend. I'm not saying these things all happen, but these are things to be mindful of, bigger picture. Imagine 6 months from now, this monthly squeeze in Apple fires short. You really think your S&Ps have found a bottom near 3,600? Really unlikely. So none of this means we're going to go buy Apple 100 strike puts. This just means you compile that list. You start at the very top. You take it down to a weekly chart. You take it down to a daily chart. From a swing trader's point of view, a lot of things point towards we want to short the rallies. And very few, better yet, nothing points to it's time to start buying the dip. The actual suggestion is if you think you've seen a good pullback this year, you haven't seen anything yet. If that monthly squeeze fires short, okay, now we're in a downtrend. Now you've taken out a trend that nothing has been able to take out since the financial crisis. Spooky stuff, guys. With that being said, of course, pick your spots wisely. The quote-unquote difficulty right now, even though we have a mile-long list of reasons as to why at least I think the market trades lower, the difficulty of loading the boat on shorts right now is the fact we're really oversold. So the S&P 500 could gap up to 3,800 today. Doesn't change a damn thing. We could probably rally back to 4,000. That doesn't change anything either. So that's where it gets a little bit tough. So be patient, pick your spots wisely. And from an emotional point of view, the days where we should be putting on the shorts, it can feel a little bit uncomfortable to put on the shorts. It's like, holy, here comes this crazy short squeeze. Everything exploding. The S&Ps are up 2%. The Qs are up 3%. It feels super, super strong. But that's where you want to put those shorts on. Because it's your best opportunity to lock in a good risk versus reward. So before I cut you guys loose here, be open-minded to putting on shorts that give you a lot of wiggle room. I think our Tesla trade's a great example. We opened the trade on Friday, but we gave the trade time. The trade expires all the way in November, so I don't need Tesla to fall apart today or this week or this month for that matter. Plenty of time. And then with your strategy selection, we'll make a lot more. We could have made a lot more if we did out-the-money puts. But if the market squeezes the shorts for a few days, your out-the-money put spread's going to go to, it's toast. So instead, we did 300 strike call credit spreads. Right up there near key resistance. That gives us so much flexibility. We have time. And in all reality, we just need Tesla under 300 come expiration. If the market rallies a bit today, we're not sitting here concerned about the Tesla trade. Instead, we're thinking, okay, what else can we short? Totally different mindset. If you back yourself into a corner, you're buying 245 puts that expire this Friday. The reality is you need Tesla to fall apart like immediately. That's where a 2 to 3 day short squeeze in the S&Ps and the Qs, become a little bit painful. So pick your spots wisely, guys. And as far as as far as you trade ideas here, the one I'll leave you with for now is Tesla. Um, do you chase an entry this morning at 250, 255? I mean, you could. I would say any bounce here, if the bounce fails to take it back above 265, look for a short. Back above 265, it's probably going to fight for a little bit. But again, very much like Apple, taking out your big 150. If I was on top of my game, I would have shorted Apple up here at 147. You finally crack, right? One more sad little attempt. That's the short. All right, so something like that in Tesla. We'll look at the hourly chart. Yeah, some sort of bounce. Otherwise, my friends, be patient. Looks like the S&Ps are going to try to bounce here a bit this morning. And we'll see how high is high. But I got to bounce in a few minutes, guys. I got the open in the gold room. So if you have any questions, any charts you want to look at, throw them at me here. We'll bang out a few. And then for those of you in the mastery, we'll be live on Thursday and Friday. And I think I'm in the free room today around, I think 1 p.m. Central. Busy day lined up. Busy day lined up. Hey, good morning, Sebastian, Robert, my man G, Harry from India. Good morning. What time is it in India? Chaz, you got in on the Apple short? Yeah, see, that's the mindset. Hoping to add at 260 if it pops. That should be the mindset, guys, right? Like, look at Tesla bigger picture. Yeah, there's some problems here. 1 hour, 30-minute, 15-minute, 5-minute sell signal. We're under the 21. We're under the 50. Histogram just starts to go negative. And we just got that negative cross, 21 under the 50. A bounce to 260 doesn't change that. What it does is it makes those puts you might want to buy a little bit cheaper. Or if you're like me and you're a bit more, I'm looking for call credit spreads right now. Say I'm trying to sell the 305 calls. Those calls gain value on that pop. So now I can short those calls and they got a little bit more meat on the bones. Frankly, a bounce all the way back up to the daily 21 at 285 doesn't really change the structure. If we wake up one morning, Tesla's trading back above that 21 EMA, all those lower time frames lose the buy signal on the big 3 indicator. Now things are changing. But this can bounce all it wants. The structure for now, pointing on down. But all right, guys, I got to cut you loose here. I am running a little bit behind schedule this morning. Let me see. Today's Monday, so a few places you guys can find me. If you head to simplertrading.com, you should find a link in there somewhere for the free room. All right, so free of charge. You guys can check that out. I'm in there for about an hour, few times per week. Sam's in there, the whole crew's in there. So you guys can check that out. Should be on the, I think it'd be on the main page here. Well, would you look at that? And there's a legend himself, the Gamble. So check out the free room, guys. I'll be in there today at 1 p.m. Central. We'll rock and roll for like an hour or so. And then, of course, for those of you in the mastery, I will see you Thursday and Friday. I wish you guys all the best of luck this week. Trade safe. And again, the most important thing is, in all my point of view, even when things look as bearish as possible, it's your job as a trader to put cash to work when you're getting a good risk versus reward. So as many things that are pointing towards here comes a bigger flush. The bounce is certainly helpful as far as getting a better risk versus reward. So even if you are short right now, I think you welcome a little bit of a bounce. But good luck, guys. For those of you in the options room, let me heat up this coffee, and I'll see y'all in a few minutes. Adios.